Welcome to Earnings Recap. Today we're covering Lyft's earnings report and call.
And there was an interesting little tidbit in there.
Oh yeah, what was that?
Well, apparently in the last week of March, Lyft saw its highest weekly ride numbers ever.
Wow, ever.
Ever. And also, a survey found drivers who use multiple apps actually prefer Lyft by 23%.
Okay, that's definitely noteworthy. So today we're going to do a deep dive into their Q1 2025 earnings report and the call. We'll break it all down for you in plain English.
Let's get into it.
All right, so first off, Lyft's calling this their strongest Q1 ever.
Yeah, records for Q1 gross bookings and active riders.
And they're stressing growth pretty much everywhere, different regions, different ride modes, different reasons people use Lyft.
The CEO, David Risher, pointed out it's their 16th straight quarter of double-digit year-on-year growth for gross bookings.
16 quarters, that's 4 years.
Exactly. He says it shows their, quote, customer-obsessed strategy is working. It suggests resilience,
And it's not just top-line growth, right? They mentioned cash generation, too.
That's right. They're getting close to generating $1 billion in cash over the last 12 months. So, growth, but as they put it, growth with discipline.
Okay, discipline sounds good. Let's dig into those financials then. Gross bookings.
$4.2 billion, that's up 13% year over year. So, yeah, continuing that double-digit trend we mentioned, definitely positive.
And revenue.
$1.5 billion, up 14% year over year.
Okay, so revenue grew slightly faster than bookings. What does that usually signal?
Well, it suggests they're getting better at monetizing each ride, maybe slightly better pricing, maybe more people taking premium rides, or just a better take rate overall the Slice Lyft keeps. It's a good sign for efficiency.
Now, this seems like the big headline number, net income.
Yeah, they actually made a profit, $2.6 million.
Which might sound small, but compared to last year.
Exactly. Compared to a loss of $31.5 million in Q1 2024. So it's a really significant swing. Shows they're moving towards sustainable profitability.
And adjusted EBITDA. That looks strong, too.
Very strong. $106.5 million. That's way up from $59.4 million last year.
Wow, almost doubled.
Right. And the margin improved, too. Adjusted EBITDA as a percentage of gross bookings went from 1.6% to 2.6%. So they're definitely getting more efficient operationally.
And the cash flow story continues that trend.
It does. Net cash from operating activities was $287.2 million, up significantly. And free cash flow more than doubled year over year to $280.7 million.
So that's almost $1 billion in trailing 12-month free cash flow they mentioned earlier.
Yeah, $919.9 million to be precise on free cash flow. Really solid. Gives them a lot of financial flexibility.
Okay, let's switch to the operational side. How are rides and riders looking?
Good momentum there, too. Rides grew 16% year over year. That's actually an acceleration.
More people taking rides.
Yep, 218.4 million rides. And active riders grew 11% year over year, hitting 24.2 million. So the user base is expanding nicely.
They also mentioned some product innovations. Anything for drivers?
Yes, they're piloting something called Earnings Assistant. It's an AI tool designed to help drivers maximize what they make.
Interesting. How could that play out?
Well, potentially happier drivers, right? If they feel they can earn more efficiently, maybe better retention, maybe better service for riders, could be a competitive edge.
And for riders.
They launched Lyft Silver. It's a service specifically for older adults.
That's a specific demographic. Is there a big opportunity there?
Seems like it. They said only about 5% of their current riders are 65 or older, but that age group is expected to grow a lot by 2030. So tapping into an underserved growing market.
Makes sense. Now, they also talked about buying back their own stock, share repurchases.
Yeah, they boosted the authorization amount to $750 million.
And they plan to use a good chunk of that soon.
Right. They intend to use $500 million over the next 12 months, with $200 million planned just in the next 3 months. They'll use those 10b5-1 plans to do it systematically.
What message does that send, increasing the buyback like that?
Usually it signals management confidence. They think the stock might be undervalued, and it's a good way to return cash to shareholders. Putting that much money to work quickly suggests pretty strong conviction about their outlook.
Speaking of outlook, what are they forecasting for Q2 2025?
They expect rides growth to stay strong in the mid-teens year over year.
Okay.
Gross bookings projected between roughly $4.4 billion and $4.6 billion. That's up 10% to 14% year over year.
Still solid growth then. And profitability.
Adjusted EBITDA is expected between $115 million and $130 million. The margin looks pretty stable, around 2.6% to 2.8%. So, yeah, continued growth and profitability expected.
Okay, let's pivot to some takeaways beyond the numbers from the call itself. What was the general feeling from management?
Pretty confident, I'd say. Enthusiastic, even.
Yeah.
Risher said he's very confident about 2025 and beyond. And the CFO, Aaron Brewer, talked about their winning formula of growth with discipline.
That kind of positive tone matters, doesn't it?
It can, yeah. Builds confidence among investors and signals a clear direction from the top.
And their overall strategy, what are the main pillars?
It seems to be focusing on the customer, that customer obsession thing, plus operational excellence, making strategic partnerships, and expanding internationally.
Right, they mentioned Europe with that Freno acquisition.
Exactly. That's a big part of the international piece, along with expanding into new demographics, like with Lyft Silver.
Let's get into some of the Q&A stuff with analysts. What about pricing? Always a hot topic.
Yeah, they said Q1 average prices were a bit lower than Q4, which is kind of typical seasonally, but still up a little year over year.
So no major price wars.
Doesn't sound like it. Their strategy seems less about just being the cheapest and more about innovation, things like Lyft Silver or Price Lock to make people prefer Lyft.
Ah, Price Lock. Tell me more about that.
It's their subscription or membership feature where you get predictable pricing, especially helpful for commuters. And it seems to be catching on.
How so?
Membership grew 21% just from Q4, and retention is high, around 75%. They said commuting is now their single biggest use case, so offering that predictability is clearly hitting a nerve.
That makes sense for regular users. What about insurance costs? Any updates there?
Still working on it through risk management, they said. But no specific news on their next big renewal cycle, the October 1st one. It's always something to watch, though.
Okay. And international. You mentioned Freno in Europe. How's Canada doing?
Really well, apparently. They said growth there roughly doubled year over year, and it was up another 50% recently. They also started onboarding drivers in Quebec.
So Canada's a bright spot, and Europe is mostly about integrating Freno for now.
Seems that way. Focus is on the 9 countries where FreeNow already operates. Sort of infill growth within that existing footprint first.
What about the future? Autonomous vehicles? AVs?
Still very much part of the plan. They sounded excited about the partnership with May Mobility, launching in Atlanta this summer, then Texas next year.
What's Lyft's angle on AVs? Just use them.
Their strategy is more about being the platform for AVs. They want to be the best way for AV companies to actually make money from their vehicles. They see more supply, whether human-driven or autonomous, as a good thing.
And they think their FlexDrive fleet management solution helps there.
Yeah, they see it as an advantage. They're even thinking long-term about a future where, someone who owns an AV could just easily add it to the Lyft network, the Lyft Ready concept.
Interesting. So embracing AVs, not fighting them.
Exactly. They see it as an opportunity, like cars eventually getting radios or losing stick shifts, just an evolution.
They also mentioned taxis in the U.S.
Yeah, pilots starting in St. Louis. It's about adding more types of vehicles, diversifying supply, especially maybe higher margin options like black cars. They think Freno's experience with taxis in Europe will help.
And Lyft Media, the advertising business.
Seems to be on track. They're aiming for a $100 million run rate by the end of this year.
Wow, $100 million. How's it performing?
Early results sound good. Brand partnerships showing high impact. They're adding new ad formats too, like video takeovers during Wait and Save. And they're experimenting with sponsored rides, basically. A brand paying for your ride to get you to their store.
Sponsored rides. That's novel.
Yeah, early days, but they said results are encouraging.
Okay, one other partnership question, Delta. That partnership ended, right?
Yes, ended April 7th. They expect it to have a gradual, sort of small impact, maybe around 1% on rides, 2% on gross bookings over time. They also noted their old Delta deal was maybe more beneficial than the one Delta has with a competitor now.
Got it. One analyst asked about gross bookings per ride being lower. Why is that?
Mainly due to strong growth in newer, less penetrated markets, think Canada, or smaller U.S. cities like Indianapolis. Rides there tend to have lower fares, low gross bookings per ride. Strong growth in the commute segment also plays a role.
And finally, any worries about consumer spending weakening?
They said they're not seeing signs of that in their data, pointed to those record rides in late March and strong recent performance. They believe rideshare is pretty resilient now, almost essential for many people commutes, medical transport.
And maybe if the economy does slow down.
Right, driving for Lyft can be a quick way for people who lose jobs to make some income, so it can be counter-cyclical in some ways.
Okay, so wrapping up the quarter, if you had to list the key strengths coming out of this report.
Definitely the strong financials, especially the cash flow. The accelerating growth in rides and riders is key. The customer focus strategy seems to be working. The product innovation for both drivers and riders.
Like the AI assistant in Lyft Silver?
Exactly. Also, the strategic expansion Canada, Free Al, Lyft Silver, their forward-looking approach to AVs, and the early success with Lyft Media, the ad platform. Lots of positives.
And on the flip side, potential weaknesses or things to keep an eye on?
Well, pricing pressure is always a background concern in this market, even if it's stable now. Integrating Free Now successfully will be important. The long-term economics and impact of AVs are still, uncertain. And watching the small, gradual impact from the Delta partnership ending.
So a lot happening. As Lyft keeps mixing its core rides business with these newer things, AVs, global reach, ads inside the app, it makes you think, how might your own transportation habits, your expectations change in the next few years because of all this?
Yeah, it's not just about convenience anymore, is it? You have to consider the wider economic effects, how our cities might change shape with these evolving transport models. Definitely something to mull over.